Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at the Elliott wave theory. This was requested by Bonaparte from Patreon. Feel free to join my Patreon. The link is going to be down below in the description. It's a great way to support me and a great way for you to send in requests and get daily exclusive content. Now, the Elliott wave theory is something that I've started using a lot more in my recent videos if you are a constant viewer. But I do want to say that I'm not a financial advisor by any means. Anything I say is strictly my opinion, and you should do your own research. Now, I'm going to leave the link in the description to this website. This is a pretty good article here regarding the Elliott wave structures and how you can understand them. And obviously, there are a lot of different possibilities of how the Elliott wave structure could play out. But we're going to take a look at the most basic example in this video. And if you are going to enjoy this and you want a second part, then I'm going to do a more in-depth guide in the second part. But let's get through the basics first. So in the 1930s, Ralph Nelson Elliott discovered a revolutionary theory, the wave principle, in 1938. Which to this day remains one of the most professional methods for forecasting financial markets. Elliott's theory wins many adherents because it turns out that wave patterns describe the structure of market movements very well. This theory provides much greater opportunities for good forecasting of market movements, including for a longer time ahead. Over the years, followers of the theory have supplemented his work, but virtually all known market models were described in the basic theory by Elliott himself more than 70 years ago. Robert Prechter, Glennie Neely, and many others introduced many rules for performing wave analysis. So I'm pretty sure, most of you have heard about the Elliott wave theory, and obviously none of the patterns, none of the technical targets, none of that is 100%, You cannot guarantee anything, especially in crypto, but once you have a lot of indicators, once you know how to use the Elliott wave theory, you know how to use the RSI, the MACD, the stochastic RSI, the Fibonacci retracement, which, by the way, I did a guide on how to use the Fibonacci retracement and how to understand it. The link is going to be in the top right-hand corner of the video. You can watch that after watching this video. So basically, the 5-wave structure here is very, very simple. Now, I'm going to drop over to Bitcoin's chart over here, and a little bit of a spoiler here. I'm going to remove that, and let's jump into the Bitcoin chart. So this is the daily chart. I don't know if we want to do daily or we want to do weekly. I think weekly is going to be a bit simpler in my opinion. So let's go for the weekly chart. Okay, we're gonna zoom out now. If you want to add in the Elliott wave theory waves over here, so I have them in my quick toolbar here. What you can do is you have to go here to the so 1, 2, 3, 4, 5, 6, the 6th column. Right here, you're going to see the Elliott impulsive wave, the Elliott triangle wave, and there are different Elliott structures here, but I'm using the Elliott impulsive wave 1, 2, 3, 4, 5, and the Elliott correction wave ABC. So you just click the star on the right side, and that will add the indicators to your toolbar. Now, you just have to click it once, and then you can start drawing the waves. So it is very simple. Now we're gonna have to zoom out a little bit for this, okay? And we're gonna start off with the COVID 2020 bottom over here. So what you want to do is, obviously, this is the weekly chart. So if I just start zooming in a little bit, you can see that this is our COVID dump over here. And a lot of people do think that if not for the COVID break here, you would have continued this way to the upside, and this is basically a black swan event, and some people don't even count that in. But for the sake of being technical and precise, we're going to use this as our low. Okay, and there are multiple rules that you need to follow in order for the Elliott wave structure to be valid, and we're going to go through those in a moment. But for now, all I want to do is just show you how you start using the structure. So basically, you click on the indicator here in the toolbar section. There you go. I just clicked it. So that is going to be your wave 1. Okay. Then you have your wave 2 pullback because you have a low here and you have your high there. That's why that's the high. Then the wave 3, the monster wave 3, is usually the largest wave of the structure. Then you have the wave 4 pullback here, and then you have the wave 5. Okay. Now the wave 5 sometimes could be higher than or could be bigger than wave 3, but usually wave 3 is the largest, and it can never be the smallest. Okay, it can never be the smallest wave out of all of these. It can be smaller than 1 and 5, although 5 can be sometimes larger than 3. So this is basically our Elliott wave structure. So you have a move to the upside here, right? You have an impulsive move, corrective, impulsive, corrective, impulsive. Okay, and that's your target. We went to the 1.272, but that's the fib retracement. You don't want that. I probably should remove that because it is a bit distracting. I apologize. So, and usually after the Elliott wave structure plays out, you get something called the ABC correction. Okay, basically this is a move to the downside, which is the A leg down, the B high, and then you get the C leg down. And right now we're looking for that C low on this chart for Bitcoin. And once we print that, we're going to start off our next 5-wave structure. So you're going to have the first move to the upside, you're going to have a little pullback, then you're going to have the monster wave 3, you're going to have a wave 4 pullback, and then you're going to have a wave 5 potentially taking us to $150,000. Well, that's just a theoretical at this point, right? Because we don't know what is going to happen. But this is the way that it plays out. Okay, you get an ABC and you continue moving forward. Now, let's not worry about the ABC just for now. Let's focus on the waves. What you want to understand is that each one of these waves, right? You have your wave 1, you have your wave 2. Each one of these waves have their own 5-wave structure inside of them. What I mean by that is it's going to be a bit harder to do this on the weekly chart. So we're going to move to the daily for this. Hopefully this is not very confusing. And I'm probably going to remove, I should have cleaned out the chart beforehand. I do apologize. So right now we are on the daily chart. Okay, so now we're going to have a whole bunch more of candles. Basically, you have a set of a 5-wave structure within the large wave 1 over here. So this wave 1 has 5 waves. Basically, everything has 5 waves. That's the theory, and based off of that theory, traders like to predict future movements. So we have our low here. It's the exact same low where the wave 1 here starts, but you're going to have a wave 1 here, wave 2 pullback, wave 3 high, wave 4 low, and the wave 5 ends exactly where the wave 1 of the large one ends. And I'm going to change the color of that so it's easier for you to see. There we go. So you have your wave 1, 2, 3, 4, 5. As you can see, wave 3 is always the largest wave. And you have your wave 4 pullback. Wave 4 sometimes can get real nasty, like we've seen with Bitcoin. You can get pretty deep pullbacks. Here, it wasn't that deep. Then you have your wave 5 leg up. Now, bear in mind, this does work the exact same way to the downside. If I flip the chart here for a second, if I click Control I, as you can see, this is the exact same way you would have it in a downtrend, right? So this is how your chart would look like in a downtrend, okay? You have your wave 1 low, you have your wave 2 high, wave 3 pullback, wave 4 high, and wave 5 pullback. So basically now everything's flipped, and you have, rather than having 3 impulsive moves, Now you have only two impulsive moves, which is 2 and wave 4, and you have the corrective wave of 1, 3, and 5, right? This is just something to keep in mind. It works both ways, so you can use it to the upside and to the downside. Now, Alt and I click Alt and I to convert it back to normal. Now, let's take a look at wave 2 here. Wave 2 has a subset of 5 waves as well. So now you start off from where wave 1 ended here. You have your wave 1 pullback, wave 2 high, wave 3 low, wave 4 high, wave 5 pullback. Now let's take a look at wave 3 here. And you know, you have to get used to using the waves. Sometimes you can pick the wrong bottom. It's really easy to mess up at the beginning, but what you do is you pick a high, then you go for the next low below, which is going to be your second wave low. Then the next high, which is usually very far away, is the third monster wave. Then you have the 4 pullback, and then the swing high, or the 5th wave, I should say. Now, let's start off with this. Okay, now starting off from the bottom here, where wave 2 bottomed out, you have your wave 1 high, your wave 2 pullback, you have your wave 3, the monster wave 3, you have your wave 4 pullback, then you have your wave 5, which is basically this high over here. So as you can see, you get the idea. Basically, you have subsets of waves within waves. It's, you know, it's it's waves within waves and all over again. So but it's really simple, and it's really interesting how this works. And like I said, you can do that the exact same way to the downside if you want to take a look and see what your downtrend is doing, how many waves you've had, and whether you're expecting the third, you know, monster wave here. And you know, it's really interesting in my opinion. And right now we're going to go over the rules of the Elliott wave structure. The second wave should never touch the beginning of the first wave. That means that this is the beginning of the first wave over here, right? This is where your wave 1 starts. So your wave 2 pullback should not come down as low as this, because in that case, it is going to be invalidated. The second point here is that the third wave is never the shortest, and it is in most cases the largest or the longest wave. And we've talked about that throughout the video. Now, the final point here is that the fourth wave must not fall below the top of the first wave. Now, this is something that people get wrong sometimes, and they keep drawing their Elliott wave theories, but they ended up, you know, drawing them wrong because the wave 4 pullback goes way below the wave 1 high, basically. So this is your wave 1 high, this is your wave low, right? So the second wave should not go below the low of the first wave, and the fourth wave should not go lower than the high of the first wave, basically. If you bounce from the exact same level, okay, that is still okay, but it should not go lower. And usually it is higher because the wave 3 move is very, very strong. And I do like to use the Elliott wave theory along with my Fibonacci retracements. That way I can, you know, have more precise targets, whether that would be the 1.618 Fib retracement or whatnot. But, you know, there are different ways to use it, and this is just the simplest way in the simplest form, and I tried to explain it as well as I possibly could. Hopefully I did not make any mistakes. If I did, feel free to correct me down below in the comment section and let me know if you found this useful. Let me know if you use the Elliott wave theory yourself and how successful are you with this structure. But yeah, that is pretty much it. Thank you all for watching, guys. I'm going to catch you in the next one. Peace out.